Hi everyone and welcome back to another video. Today we are going to be taking a look at Chainlink, but first of all, Happy New Year to everyone. It is now 2023 and with 2023 a new year brings new opportunities in the market, and I think Chainlink may be one big massive opportunity in the market. So we're going to have a look at some accumulation soon for Chainlink, some comparisons to Ethereum's first cycle, some bullish candles that might need filling on the way up that was formed, and some really key Fibonacci levels that we're going to be looking out for. So without further ado, if you aren't already, hit the like button, subscribe if you aren't already, and let's get into it. So guys, what I've done for now is just take us to the monthly time frame, and I've put Chainlink on the left hand side of the screen and Ethereum on the right, so you can get a better idea of what comparisons we are looking at really. And it's almost like looking at a mirror picture here for the cycles of Chainlink and Ethereum. Obviously Ethereum was back in 2017, 18 and 19. That's when its first cycle was, and I think Chainlink's just gone through its first cycle, and now we're trying to distinguish how are we going to try and find a accumulation structure, a bottoming for a Chainlink, and some comparisons that we can do to Ethereum in the past and how we could spot in the past when Ethereum was bottomed. And I think to point out one of the main things for Ethereum to figure out when this accumulation was going to start is, if you have a look here for this big bullish candle for Ethereum, you can see it took us to the bottom of that big bullish candle on the breakout. We had to come back and eventually fill that big bullish candle. So if we do the same here for Chainlink, that level would be at around, get that back in the middle of the screen there, that level would be at around $4.50, and that is really not far away at all. And I'm not saying that we have to get that drop in the meantime, but for Chainlink, a possible another 20% drop to that level would coincide with the same level that Ethereum had to go through in its first cycle, and we are looking at similar percentages here. If you have a look, it's not exactly the same, but Chainlink, if it went to $4.50, about a 91% correction, and I think Ethereum's was actually a little bit more, yeah, about 94%. But if you think back to this time in the market back in 2018, there was not as much liquidity as there is in the market right now. And I think for Chainlink, it's really approaching a key time for Chainlink, just like it was back here for Ethereum. And it doesn't mean that we have to skyrocket to the upside straight away for Chainlink, because if we just scroll to the right here, you can see Ethereum went through a massive accumulation structure of pumps, dumps, back to exactly the same levels, and that took about a year. So I think for Chainlink here, if we do end up going into an accumulation structure, something like this, get the drop, get a nice pump, get the drop again, pump, dump, and get people bored, get people impatient, I think that would be a really nice time in the market, because you could actually start to benefit from these moves to the upside. Some moves like that, 100% to accumulate your holdings and sell some and then reaccumulate back at the same level. That's what the big whales are going to be doing. That's what the market makers are probably going to be seeking to do when they're building longs down here and building shorts at the higher levels, to then move into a higher move maybe in 2023, 2024. So just bringing it back now to Chainlink after seeing the comparisons to Ethereum. Let's try and focus on some key Fibonacci levels now that might coincide with the $4.50. And I think one of the main things that a lot of people don't know you can do is just, if you are having a look at a coin or a market structure on these higher time frame levels, and you can see a really nice candle body range here that we reacted from nicely for around, that was a good 6 months there with wicks and candle bodies. What we can actually do there is, if we take the Fibonacci retracement from high of the range to the low of the range, we get a negative 141.4% down here, and that coincides with the key level that we was looking at earlier, around $4.67. So not directly at the $4.50 mark, but that really is as close as you're going to get. So I think one level that we need to have marked out is the negative 141%. So that really coincides. We don't have to mark out another level because it already coincides with the big bullish breakout candle here. That Chainlink might be coming in down just to fill, to then go into a nice accumulation structure like we got with Ethereum, to then maybe in 2023, 2024 go into its brand new cycle. And you know, that could be something that we can benefit from. But again, we can also benefit from these nice little ranges here that start to develop in an accumulation structure. So you don't want to be missing out on the key moves in the next coming weeks and months. So right now for Chainlink, I've just taken us to the 4 hourly time frame, just so we can get a better idea of what's been going on in these waves of the past few months. And what I'm seeing here is a classic sign of Wyckoff accumulation, where you get your initial drop, you get your second drop that breaks them levels, and then what would this be if we was to come down and take these lows down at the $4.50? That would be your final spring phase of the Wyckoff accumulation for us to then come back up, retest these levels, and start to work our way up. And that would be the beginning steps of the accumulation structure that we looked at earlier for Chainlink, like Ethereum got in its past cycle. So I think some things for Chainlink are lining up really, really nicely here, and we just have to stay patient because, you know, we might not get this move down. We don't know. We might not get the move up. We have no idea, but all we can do is just look at previous examples, see how previous market cycles have worked, use that and use that knowledge to try and benefit our decision making in the future, because realistically no one knows what's going to happen. We're just making our best guess here, and as we are 92% down from all-time highs, these are the times, in my opinion, to be really, really interested in the market. We don't want to be getting interested at the all-time highs where the market makers begin to build shorts. We want to be getting in when the market makers are building longs. We want to be on the right side of the trade. But you guys know, again, from me, it's not financial advice. If you want already, drop a like on the video, subscribe. Let me know in the comments what you think of this, what you think of Chainlink. I will respond to every single comment, no problem about that. But yeah, once again, guys, I will see you next time. Cheers.